Arthur Naoumidis from Domacom. Welcome.
Hey, it's good to be here, Mark.
Let's look at Domacom, what it is, for people that are not familiar with the company. So tell us briefly about what you guys do, and we'll go a bit deeper after that.
Yeah, firstly, the core business is a fractional investment platform. As the name suggests, we take large assets and divide it into bite-sized chunks as a financial product.
Right.
The majority of our investments are property, so we're fractional property investing. However, we also have advisors using our platform to fractionalise mortgages. So in other words, to cut out the middleman and just get into mortgage debt fractionalisation. So that's the first product, and the other is basically allowing retirees to sell a bit of their property, what we call senior equity release. So they're the two main products behind Domacom.
That's a big market, I think, especially the latter one, where a lot of people sort of cash strapped, got their house, don't want to leave. But really, they're looking for a way to get some capital out. Right?
It's actually bigger than people think, because not only, everyone knows there's a large pool of retirees that are asset-rich, cash poor, but even those now with the superannuation balance, with the low returns they're getting from term deposits and everything else, their investment portfolios that historically would have given them a good, comfortable life probably aren't at the moment, and they're eating capital. So they need to top up their income from somewhere. So maybe selling a bit of their house is the way to go.
And that's where you guys come in, right?
Yep.
So you had a ruling from the ATO in October. Tell us about that and what it means, especially looking forward for Domacom.
Yeah. So basically, as some people may remember, we've been with the ATO in federal court. We've won against the ATO on what's called the sole purpose test about a year and a half ago, and then most of last year we're engaged with the ATO to negotiate what words or what marketing they're going to be happy with. So we've now reached an agreed position as to what we need to do to be able to use Domacom for an SMSF to invest in Domacom, and then subsequently related parties, children, may apply to be a tenant in certain circumstances, and we've nailed what those circumstances are. Okay. So it's looking forward. It's a very big opportunity. We've already got interest, and we're now starting to present to accountants and financial planners. Right.
And so one of the elements that was missing was debt funding, basically. People don't buy houses, with 100% of equity, right? So Latrobe came in with a loan facility for Domacom. Talk about that, and also I think this could be a huge driver for your business, basically.
Well, it's going to be, and like all things, it takes a while. It took us 5 years to get someone to lend to us, and as you sort of alluded, not many people buy an investment property without debt, particularly from an investment perspective. Without debt, it's not tax efficient, and so from an advisor perspective, they couldn't use us. We now have debt. It took us quite a few months to get the legals done in our first transaction. We've now transacted several times with Latrobe, and what it means is that people can go to Domacom, at a click of a button, create a leveraged property transaction. They don't need to apply. There's no serviceability checks. The borrower is the Domacom fund. So there's no loan, what they call a limited recourse borrowing arrangement needed by an SMSF. There's no bear trust. It saves up to $5,000 or $10,000 in setup fees. So
it simplifies the process.
Yes, very, very, very.
Right. And you mentioned advisors can't sort of advise on these sorts of transactions without debt. Talk a little bit about that, because that's an important one.
Well, so advisors have, as people say, a best interest test. Okay. Yeah. And the best interest for investors is not just the investment outcome; it's the tax impact of that outcome. And so for most investors, if they're earning a salary, receiving an investment income is taxable at your top marginal rate, whereas putting a bit of leverage inside the investment means you get growth. And so the tax impact of advice is just as important. And until we had debt, we couldn't be tax efficient.
Right. Okay. So looking out and growing your funds under management, what do you think are the key challenges to do that right now?
Well, basically, I think we've got all our, our ducks in the line, as you said last year. So we're ready to go. The final bit was capital, and so over the last 6 months, we've added $6 million into Domacom's balance sheet. We're now, not month by month living as we have been for the last 2 years. So we're now focused on transactions, and so we've actually
take a sort of a longer term view now.
Yes. And so for the first time for a long time, I'm not looking at where I'm going to get the capital, and now we're focusing on transactions, and we've got three fractional investment transactions in progress. The first is rent to own, which is just currently being launched, where investors are sharing some of the developer discount and the tenant is being gifted equity. So it's a really, really exciting product for us. So and you'll see more of that in the next few weeks.
Is that driven by the fact that there's a lot of development going on now?
Well, it's a developer excess stock, but also developers are looking to see how they can access the financial planner channel, because historically they used to be able to do using the off the plan stamp duty discounts. That's no longer available. So there's no carrot right? Well, we've now figured out a way, and effectively all that's happening is the developer would normally pay a distribution channel, to sell their product.
Yep.
So we're cutting out that distribution channel and giving that value to investors and tenants.
What sort of percentage is in it for them then? If
the investors will get about a 15% uplift on what they invest $200,000, they get $230,000 worth of units, and the tenant will get 1% per year for up to 10 years.
Right.
So over 10 years, they can get 10% of the Domacom sub fund. So there is no product like this anywhere, and it's a very compelling product. So you'll hear more about it in the next few weeks.
Yeah. So, all right. So we'll keep our eyes open for that. Just in terms of the addressable market, I think for the sort of the two big products you have, it's huge. Maybe if you can name some numbers around that, but specifically in the near term, where do you see the growth for them?
Well, so as I said, we're now focused on growth transactions. Yeah. So on the fractional investing side, it's really about rent to own, and there's an affordable housing version of it. Right. So for essential workers. So we're hoping that over the next year we can do anywhere from 50 to 100 to $200 million worth of transactions. So that's number one, and we also changed our fee model a little bit. So for these ones, we're dropping our ongoing fee from 88 to 66 bips, but we're adding a 1% upfront syndication fee. So basically it'll have a material impact to our cash flow. So that's exciting. And the other side is the senior equity release. We've got our first advisor workshop next week where we're going to get advisors accredited because we've already got people all over Australia who can't get access to reverse mortgages and everything else approaching us, but we need financial advisors to give them full advice. So hopefully by the end of February, we're going to have advisors across all of Australia, and we'll begin marketing that as well.
All right, excellent. Arthur Naoumidis, an exciting 2020 to look forward to, I guess.
Yes, it is. I'm really looking forward to it.
All right, thank you very much.
Mate. Cheers.